A common goal for many young Australians is to buy their first home. But before you rush out and buy a house, there are a few things you should understand first. And considering a mortgage is usually a 25 to 30 year commitment, it's not something you should take lightly. A popular thought is to buy property when interest rates are low. The problem with doing this is not factoring in the possibility that interest rates might go up. If you're finding it tight making repayments at 4 or 5%, how do you think you'd cope paying 10% or more? On a $400,000 mortgage, the difference is well over $1,000 a month. Again, it's a long-term commitment and no bank is prepared to fix your rate at 4% for 30 years. There are many costs involved in owning a home beyond paying off a mortgage, so it's important to do your homework beyond working out how much you could repay. Here's a few other things you should consider. Maintenance costs. As a rule of thumb, allow for 1% of the capital value in yearly repairs and maintenance costs. Other costs include insurance premiums, council rates, water rates, and emergency services levy. On an average house, you could be looking at over $7,000 per year, so it's important to do your homework first. In terms of qualifying for loans, the global financial crisis has tightened up credit markets, which means lenders have become stricter with their lending criteria. There are no more 100% loans. Only very few lenders still do this. Nearly all banks require a 5% deposit and clean credit history. Even a missed or late payment of a mobile phone bill will show on your credit history and can hurt your chances of getting a loan. Just because a bank will lend you a given amount doesn't necessarily mean you'll easily be able to make the monthly repayments. These repayments should be around 25 to 30% of your gross monthly income. At the end of the day, you still have to live, right? The great benefit of buying property is that it forces people to make a regular repayment, which slowly builds wealth over a long period of time. The more you save now, the less you need to borrow, and the better your chances are when applying for a loan.